Welcome to the Finance Forum. I'm Abdu-Raof Hanslo. My guest in studio today is Mr. Etienne Wilsnach from Alchemy Financial Services. And just before the program started, we had a hefty conversation concerning some passionate moments in Etienne's life concerning the risks that our community and himself has gone through in the past. And today specifically, we'd want to capitalize on that information for Etienne to impart to you, the viewers of the Finance Forum. Today we cover risk cover, or at least we speak risk cover, and in depth letting you know exactly what is out there and what best and proper advice you should be looking for when looking at risk cover. Good evening to you, Etienne. How are you?
Good evening, Abdu-Raof. I'm very well. I'm happy to be back again.
You know, chatting to you before the program, I mean, I clearly saw the passion when looking at specifically risk cover. So this, to me, showed me that this is an integral part of financial planning, but also something that's very close to your heart. So I think to kick off the program, can you give our viewers a brief synopsis of exactly what risk cover is?
Okay, so before I get to the technical part, thank you so much for positioning it that way, because it really gives me an opportunity to share with your audience and your viewers how I genuinely feel about the topic. But this is the area for me in the last 24 years that I've seen the most damage done, the most heartache, the most despair. See, in our industry, for me personally, it's all about quality of life. And the advice I give my client is to ensure quality of life. So when you're not investing money, when your kid gets to matric and you can go to the bank and you can make a loan to put them in university. If you get to retirement and you don't have sufficient retirement funding, you know your kids can help you hard. That is fine.
Yeah.
However, if your husband dies, if your husband passes away, and he did not provide in his portfolio sufficient risk cover, sufficient life, disability, and severe illness, nobody can help you. You can't go and make a loan to provide for that. And I think that's why when I started, I said to you that to me it's got a different take on it. Because it's all about quality of life. And I think in 24 years I've seen very ignorant debates about it. I've seen people with ill discipline and not taking it seriously. But then I can take you to the families where they've lived in a beautiful home in Belhar, and dad was a police officer or a traffic officer, and there was a good quality of life. They had a car, they could go on holiday, and they had DSTV, and it all was well. And then dad died.
Yeah.
And I would go to the family and say, I'm sorry guys, you can't, there wasn't sufficient funding to pay your bond. There isn't a continuation of your income, okay? You are facing poverty. So you've got poverty with the loss of a loved one. It's a terrible combination. I'm always saying to people, it's okay if you have to deal with the loss of your partner or loss of a family member. Throw in a healthy dose of poverty and it becomes a different reality. So, and risk cover talks to that. So how do I protect my wife and my kids, and how can I create a continuation of that quality of life that I have established? That's what it's about. And my urge to your viewers, say, you know what, don't care what my opinion about it is. Let me have the conversation. Let me do an analysis and say, if I die today, if I were to be disabled today, can I pay with my bond? And can I create an income that will at least provide some legacy for my family? And if the answer is yes, and it's important to you, if you care enough, then make a difference. Do something about it.
Now, you know, when I look at the word risk, we all look at risk in different ways. And if I define the term risk, if I'm going to jump off a bridge with a bungee cord attached to my ankles, that's risk.
Yes.
If I get into my car and I drive at 180 kilometers an hour, that's also risk.
Okay.
But if I don't eat healthy, that's a risk to my health as well.
Yes.
And if I don't specifically look to the future in securing my family, that's a risk to them.
Yes.
So in the sense of risk cover, does it take the term risk wholeheartedly, the definition of it, and does it try to apply solutions to those risks in your life?
Exactly. So it's not the obvious risk. It's not like the bungee jumping.
Yeah.
It's the unseen risk, but it's really the risk of saying if an event does occur and that impacts my ability to earn an income or my family to have an income and provide for them, what is the risk of that event, and then how do I insure myself against that risk? So it's the combination of risk insurance and saying, I have a risk, I died, I have a bond of 1 million rand, my wife is a housewife raising my kids. If I die, she cannot service the bond. That's the risk. The risk is then I could lose my property, I could lose my home. So how do I insure that risk? And that will be called life cover.
Now when looking at South Africa's scenario, Etienne, what types of covers, as far as risk is available in South Africa? Now, obviously, we've spoken before in previous programs about various different types of insurances, short-term and long-term,
Yes.
Or short-term and life, at least. When speaking about risk cover in South Africa, what types of cover is available to our communities?
There's multi-levels of cover. It can become quite complicated, but I'm going to just quickly touch on the basics. And the basics is life cover. It says, if I die, can I provide a legacy for my family? Can I provide income for my family? Then there's disability cover, where it's, if I am to be disabled today for any reason, being it natural or accidental, and I can no longer generate an income because I am disabled, how can I substitute my income through cover, through disability cover? The third one, and the one I want to really delve on later in our conversation, is severe illness cover. Because it's one that's really not offered and not spoken of, yet the probability of now having a heart attack, cancer, kidney failure is far greater statistically than becoming disabled. Yet we've got disability cover, but we don't look at severe illness cover. And then there's the income benefits, where we say, hang on, I'm self-employed or employed, and I want to ensure that if I, for any reason caused by illness, cannot generate that income, how can I protect my income? So those are the four basics: life, disability, severe illness, and then of course the income nature one.
Okay, now you've spoken about, just on that point, you've spoken about various different types of covers.
Yes.
So in my opinion, and correct me if I'm wrong, there's two types of covers. There's basically a lump sum benefit cover.
Yes.
And there's an income benefit cover.
Yes.
Can you basically define the two, or differentiate between the two, and how it works basically during your life in contribution, and as far as when the payouts will happen?
Okay, so the two they're fundamentally different. One is what we call lump sum of nature. So that I would use basically to settle debt, for example, or you can use it to create an income. To simplify the conversation, I have a bond of 2 million rand and I'd like my wife to earn 10,000 rand a month. I would make the sum and say, if I died, I need her to have 2.5 million rand of cover. That's a capital amount. It's a single amount that's paid to her. She can settle the bond and then invest the balance for an income.
Okay.
More recently, though, in recent years, they've established what we call income benefits. That you can go to a company and say, I earn 50,000 rand a month. If I am to become disabled or I'm ill, I can no longer generate that income. Specifically, or more so, self-employed individuals, I can then insure my income and say that if I'm to be disabled, I can get a portion. So I can get 40,000 rand a month paid to me with inflation for the rest of my life if I am disabled or incapable of generating that income. That's income nature. So that can go on forever. Just the caution is, and that's why I'm cautioning not to complicate it. The one is generally a little bit more expensive than the capital nature one. And that's why it's often not introduced to the marketplace.
That would be specifically the income.
Very much so, yeah.
Okay.
Yeah.
So the income benefit structure basically would take into account if anything does happen to your being that you're unable to work, that you would receive an income.
For health reasons.
For health reasons.
Yes.
Basically, but not for retrenchment or unemployment.
There are a few. I'm particularly not in favour of this, but they are in the marketplace. So if you'd like to know more about the retrenchment packages, they are available. What are you talking about specifically now as a risk?
Yeah.
Saying, Etienne, I've been diagnosed with cancer. I was in a car accident. I'm a paraplegic. I can no longer function in my employ. how do I ensure my income?
Yeah.
Self-employed specifically, if I'm self-employed and I'm used to generating an income that provided my family and my life with a specific quality, a car that I drive, the home that I live in, and I want to be able to maintain that, how can I protect myself?
I'm going to play devil's advocate here. So ultimately, Etienne, and I know you're not a medical practitioner, but the question I'd like to ask is, when looking at these types of policies, what ultimately, in a broad spectrum, would qualify as disability? In the sense of when you've taken out these types of policies and you've reached a point where you've injured yourself, or you've been in a car accident and you suffered some long-term effects from it.
Yes.
What would basically, in a broad sense, what would qualify as a disability?
So I'm going to have to caution your viewers. Each company has their own definitions.
Yeah.
So if I had to go to an old mutual, the definitions would be slightly different. Then you could go into some of the online marketing where you can purchase something on the telephone. Their definitions would be fundamentally different to an old mutual, for example. So I'm going to caution right up front and saying, when you do choose a disability benefit, please read the small print.
Yeah.
Okay, because some of them have restrictions, some of their definitions are different. But in most insurers, they've got tests that they would rate you on. Say, so if I was a teacher and I'm to be disabled, what would represent disability for me as a teacher? Okay, what would represent daily function? When can I not perform as a teacher? And they would use these definitions in a scoring method to define you. So it can become quite complicated on the offhand. So I think what's important is when you choose a company, speak to your advisor and tell him he's got to make sure that your client understands that company's definitions of disability. But the simpler forms is paraplegic. I have a beautiful client that he was test driving a new BMW a few years ago. He unfortunately, the car rolled and he is a paraplegic, disabled from the neck down. That is straightforward. You know, he's disabled. He lost the function of his hands, and that would have qualified as disability quite easily. But I think that the long and the short of it, each company has their own definition. You've got to weigh yourself with how that company would score that.
Now, you know, from the Finance Forum side, we're always propagating fit and proper advice, and we're always advising our viewers to go and seek financial advice from a financial planner, a financial advisor. And what you've just said basically proves the point once again, that for the best possible cover out there that suits your need, seek financial advice. Etienne, how does one know if you have enough cover or too little cover? And what are the steps that needs to be taken to identify and ascertain whether you have enough risk cover from a financial planning perspective?
So the first step is a financial needs analysis, where somebody technically has to sit down with you. And I know for most consumers it's tedious, but please take my advice, go through the process where they actually do a spreadsheet calculation for you. What is your bond? How much cover would you need? What is your income need for sundry expenses? What type of income would you like? What are your assets and liabilities? And do that checklist. Okay. What I can give your client a bit of a tip is that in 24 years, I've met only 2 people that could afford to purchase what the FNA told them to. So I want to alleviate the pressure. Most people say, Etienne, you know what, your final decision needs to be based on affordability anyway. So do the financial needs analysis, get a sense of what you need. Do not fear it. When you know what you need, then take the first step based on what you can afford to invest in your portfolio. Okay, and then systemically, year on year, you build onto that to get to a point where you say, you know what, if I passed on today, the legacy that I'm leaving my wife and my kids is sufficient. I'm happy with that. Because I think what happens, a lot of people find themselves in this, the anxiety of it, I can't afford that. So it's fine. Most people cannot afford what they analytically or theoretically should have.
Yeah.
Just go on based on what's affordable for you with a healthy dose of discipline. Don't be delusional about it. So I can only afford 200 rand, but in the back of your mind, you knew you could have done 400.
Yeah.
Okay, that's a different conversation. But do the financial needs analysis, get a sense of what you would like to see for your family, and then start and say, okay, this is what I need, and this is what I can afford today. Let's review it 6 months or 12 months from now, and we systemically build onto that portfolio as we grow into the next stage of our lives.
Now, Etienne, if I had a policy for 10 years, and I know that there's been cover that was allocated to me 10 years ago, would it be a good idea to review that policy or even replace that policy?
Absolutely. Absolutely. The cost of life insurance since about 2000 had probably reduced about 9 times. And the structure of the old generation products, the universal products, where they used to combine life and investment in the same product, those have become obsolete. So you know what, have a look at it, and I'll be surprised if you don't find a saving somewhere in all of that. In the last 2 years in the GPF space, we often did what we call the pay sheet cleanup, and we often found that by refreshing the portfolio and looking at new generation benefits, we saved consumers hundreds of rands a month that they could then reinvest somewhere else because you're spending it. So in other words, you got more life cover for less premium. That premium saving you could reinvest somewhere else, and it made it a far better option.
Now, would this apply to both life cover and disability and income cover?
Your entire portfolio. So if you're sitting on old generation products, it's definitely worth your while. Bearing in mind, though, that you must take into consideration your health condition presently. So if you're still in good health, then it's not going to discredit you in any way. It's definitely worth looking at it. Don't just willy-nilly replace, but have a look at it. And my bet is that you're probably going to find a saving in all of that.
Now, how often should these policies be reviewed, Etienne?
In my personal, at least twice a year. At least. You know, there's an international statistic now that you should be reviewing it every 3 months. But it depends on the nature of your relationship, what life cycle you're in. But generically, I would say twice a year.
And with regard to my will, if I have life cover,
yes,
how does this talk to my will? And then secondly, also, as far as costs are concerned, are there any costs associated with reviewing your policies? Are there any costs associated with taking out new policies? And at the end, when I'm no longer there, the day I close my eyes, what costs are going to be associated with the payout of the risk cover?
Okay, so there's no cost to the payout of the risk cover. And if we talk about how does it talk to my estate, I had a conversation with Old Mutual Trust a few weeks ago, and they said at the moment 80% of all trusts that they deal with are insolvent. In other words, there's not enough cash in their estate. People don't understand, as I said in the earlier episode, it's expensive to die in this country, and people do not know that, hang on, in order for me to ensure that my family get what they need, I can actually use a life policy to ensure that some cash goes into my estate to ensure that that can be wound up and done effectively. Okay, so, but the cost of your life cover, or the winding up of it, the payout, there's no cost to that.
So I would basically ascertain that a young person that's basically just got married, has a new family, just purchased the house, has a massive bond on the house, a massive debt on the car, that person's cover should actually be very, very high to cover the debts that he's basically made. And I'm playing financial planner here, but I'm just throwing it out there. So if he has high debts, a car, the house, the wife, that's all high debts.
Yes.
So in that regard, I would expect that person to be highly covered as far as risk cover is concerned in the eventuality that something happens to him tomorrow.
So in theory, yes. The truth of it, though, is that most people, you'd have to personalize that answer and say, if I am married, I have 2 kids, I've just purchased a house in the northern suburbs for 1.2 million. If I die as the breadwinner, as the person that generates the income to pay all of this, okay, is it important for me as the man that if I pass on, that my wife can stay in the property, it will be paid for, and they can still continue the life that I wanted for them? That's the part that we're missing. I think life insurance had been sold as a product for too long. And we need to step away from that. We need to, what is the goal? What is it? What is important to you as a man? Is a legacy important? Do you want to ensure the quality of life of your wife or your husband if your wife died? And if that is important to you, then yes, you should. If it's not important to you, I cannot force you. Okay. So for many years, I've steered away from having the product conversation.
Yeah.
What you need to establish is what is important. What are your values as a man, as the income provider? And if your wife is a dual income provider, how important is it for her to have the same benefits? Because if my wife dies, can I maintain my quality of life? Okay. And if you have that answer, then your next step is to look at product. But don't look at the product first. What are your values? What's important to you as a dad, as a father, and as a husband?
Now, Etienne, earlier on you mentioned two things. You mentioned disability cover and severe illness cover.
Yes.
So, in my mind, I would expect that to be very similar. But can you basically give us the fundamental differences between disability cover and severe illness cover?
So I'm going to use a statistic. What is ironic, at more people...
and which one of them are more important as well? I think that's more important.
The statistic's going to answer that one. So the reality is that most people have disability because it's relatively inexpensive in relation to severe illness cover. Yeah. Severe illness cover is more expensive. Why? Because the probability of having a severe event in your life like cancer, kidney failure, a heart attack is far greater than becoming disabled. So if you want to test the theory at home, sit down and say, how many people do I know that's actually disabled? And you might think of one or two, and then say, how many people do I know that's contracted cancer, also had a stroke? And that number generally is quite high. So I'm saying, if that statistic is so obvious, why are we having so many people covered for disability cover but not for severe illness cover? The fundamental difference between the two is that severe illness cover is the one that says, I had a heart attack, my doctor says I need to be at home for a year, I need to exercise, and I can then go back to work. So it's not permanent of nature. How is that going to impact my quality of life? Because for 6 months or 1 year I cannot generate an income. And if it is so, I can protect myself. Disability is permanent of nature, which generally means if I'm disabled, I can never again generate an income. And how do I protect myself against that? My concern is that very few people have a severe illness cover in relation to disability cover. So there's many of us that have the standard life and disability cover, but we've not had the severe illness conversation with our broker.
Etienne, your final words to our viewers. What advice do you have for them, and where to from here? If anyone is still uncertain about whether they require severe illness cover, life cover, or disability cover, what advice do you have for them?
First thing is to tap into your own value system. Ask yourself, how important is it that I provide for my dependents? Some dependents could even be your mom and dad. Okay, if I want to leave a legacy. And then if it's important to me, have the conversation with your broker. Ask him to do an analysis for you. And if you find that there's a need to protect your family against death and disability and severe illness, based on affordability, speak to your broker and get sufficient cover in place for now. But do not avoid the conversation. Do not be reckless about it. Because I've seen hundreds of times, you know what, I always say you can deal with death, you can manage that emotion, but you can't manage poverty. And you can avoid that by having a simple conversation with your broker and saying, you know what, this is where I'm at, these are important, this is what I can afford, what can you put in place for me? But do not avoid the conversation.
The only guarantee in life is death. And in this regard, we've been speaking about how to cover ourselves for that eventuality. The rest leading up to that event is risk. Every day we spend on this earth, it's risk. Today we gave you a little bit of insight as to how best we can manage our risks and our life going forward. I thank Etienne Volsnach from Alchemy Financial Services for being here today and for giving you further insight into this very vital topic, which should be part of our lives. You've been watching the Finance Forum with myself, Abdu-Raof Hanslo, and until next time, stay focused to your finances.